Good afternoon. I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. Welcome to today's Smart Investing Daily Briefing. Well, today we're talking about home improvements looking strong. I mean, with the appreciation of houses and so forth, there's a lot more equity, and people are saying, wait a minute, I got some equity. I think I'm going to improve my house. I'm going to put some money back in my house. Look at this. 2017 spending estimated to be $321 billion just on improving the home. Expenditures of their income is jumping to 8% when the average has been 4.9%. So it shows people are spending a lot more money remodeling or improving their home.
And the reason we're seeing this is because home equity is up. Your house is worth more, so you feel better about it. As you can see in the first quarter, it was up $260 billion, and now 38 million borrowers have at least 20% equity in the home. That is great. That is awesome to see. Some of the upgrades you'll see are bath, kitchen, and insulation. Now these are the most bang for your buck is what we like to say, improvements on the home. But why we say bang for the buck, it's important to understand if you put $17,000 into these improvements, you're not getting $17,000 additionally for the equity of the home.
A lot for your pleasure as well. So what we thought we'd do is take a look at a company that can maybe benefit from the home improvement market and so forth. That's Boise Cascade Company. Current price around 26, their high 34, the low 1380. I mean, look at this back in 2015, well over 40 and down below 15. So let's get some numbers here on Boise Cascade. Now what they do is they do insulation, roofing, decking. They do it for commercial. They do it for residential. They do also sheet metal, like for siding on houses. Many different things they do. It's a very diversified company. Well, you'd use them to remodel your house. Doing pretty well on the sales side, up 2.4%, but earnings down 39.4%. So I'm questioning maybe that's why they fell so much. Earnings, maybe they're spending on something to build the business going forward.
Yeah, exactly. And I'd really want to understand this business too. Where's the money going? So I mean, they sell to home improvement. How much is direct to consumer? How much is to the home improvement stores, retail stores? Very important to understand that as an investor. The balance sheet, however, looks pretty good. As you can see, current ratio 2.37. That's good. Debt to equity is kind of approaching an uncomfortable level. It's at 88.12% now. But the reason I say approaching is because in the last year, debt has grown by 57%.
Wow.
Why did they take on that debt, and is that going to continue? Those are things you need to understand as an investor. Looking at this company going forward to December 2017, estimated earnings per share, $1.79 gives a target sell price of $29.54. So not necessarily a buy here. And also some important things I want to point out. Going to December 2018, the EPS is $3.85. But important to understand, there's only one analyst. So always got to look at all the numbers.
Yep, got to look at all the numbers. Again, I think it's worth looking into and really understand the business because, again, their debt is going up. I think they're building for the future. And with all that remodel money, they are going to benefit somehow. And a lot of these other remodel companies, they're already very pricey. So we found this one for you, which could be a buy, but do your homework as always. So, well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like a free report on the 5 big mistakes investors make,
give us a call, 858-546-4306. And if you've missed any previous Smart Investing Daily Briefings, go to our website, smartinvesting2000.com.